What if I told you the U.S. Treasury could generate a staggering $81 trillion in new wealth by 2045? It sounds like something straight out of a science fiction movie. But what if it were possible with just a single strategic investment in digital gold? This isn't just some fantasy. It's a detailed proposal that actually builds on steps the U.S. government is already taking. It's a plan that could, in theory, wipe out the national debt and lock in another century of American economic dominance. In this video, we're going to break down exactly how this wild plan could work, why it's being seriously discussed in Washington, and what it would mean for your money and the U.S. economy. The core idea is as audacious as it is stunningly simple. The United States government should create a strategic Bitcoin reserve. The most vocal and detailed champion of this plan is Michael Saylor, the executive chairman of MicroStrategy. His argument isn't for the U.S. to swap the dollar for Bitcoin, far from it. Instead, he argues the U.S. should treat Bitcoin as property, digital property. Think of it like a cyber Manhattan, a vast, undeveloped, but incredibly valuable piece of territory in the digital world. The proposal is for the U.S. Treasury to acquire a huge chunk of Bitcoin's finite supply, somewhere between 5% and 25%, which works out to about 1 to 5 million Bitcoin. By doing this, Saylor and other proponents believe the nation could generate anywhere from $16 to that jaw-dropping $81 trillion in wealth for the Treasury by 2045. And the endgame: to create an economic engine powerful enough to tackle the ballooning national debt, hedge against inflation, and cement America's place as the world's economic and tech leader for generations. It's a plan meant to strengthen the U.S. dollar, not replace it. But that begs the question, is the U.S. starting from scratch? You might be surprised to learn the government is already one of the biggest Bitcoin holders on the planet. Long before anyone was talking about a strategic reserve, the U.S. government was quietly stacking a massive Bitcoin fortune. Not by playing the markets, but through its police work. As of early 2026, the United States holds approximately 328,372 BTC. The lion's share of these coins comes from seizing assets in high-profile cases, like shutting down the Silk Road marketplace and recovering stolen funds from the Bitfinex exchange hack. For years, the government's playbook was simple: auction off the seized Bitcoin to the highest bidder. In fact, some analysts argue that these premature sales have cost taxpayers billions in potential gains. But a huge policy shift is now underway. An executive order in January 2025 established a working group to explore a national strategy, which was followed by a White House announcement on March 3, 2025, that the U.S. would create a strategic Bitcoin reserve. The mission was to consolidate these seized assets and treat them as a national treasure. The order was crystal clear: the United States will not sell the Bitcoin in this reserve. That single decision was a massive pivot. It changed Bitcoin's status from a criminal asset to be sold off to a strategic asset to be held. It took the government's accidental multi-billion-dollar stockpile and made it the seed money for what could become the most valuable national reserve in modern history. The question was no longer if the U.S. would hold Bitcoin, but what it was going to do with it. So, why would the United States, the country that literally controls the world, as reserve currency, even consider an idea this radical? The answer lies in the massive challenges it's facing. First, and most obviously, the national debt. At over $38 trillion and growing by the second, it's a number so big it's hard to even wrap your head around. Supporters of the Bitcoin reserve see it as a fix that costs the taxpayer nothing. Saylor's models suggest that an $81 trillion return by 2045, with trillions more in annual returns after that, could be a powerful weapon for chipping away at that debt. The second reason is the constant threat of inflation and the slow-motion decay of the dollar's buying power. In this picture, Bitcoin isn't a rival to the dollar, but a partner. Its main feature is built-in mathematical scarcity. There will only ever be 21 million Bitcoin. This makes it a great hedge against currency devaluation, almost like digital gold. By holding a big reserve of this hard asset, the U.S. could help protect its national balance sheet from inflation, which in turn strengthens the dollar's long-term standing. The third reason is maybe the most important: geopolitics. We are living through the first shots of a new tech race. Saylor loves using historical analogies here. He compares buying Bitcoin today to the Louisiana Purchase or the Dutch buying Manhattan for a handful of trinkets. These were moments where a small, early investment secured an asset that turned out to be priceless. In the 21st century, the new frontier isn't land. It's cyberspace. Proponents argue that the U.S. has a very short window to grab a dominant share of this digital real estate before other world powers beat them to it. There's a real sense of urgency, with some believing that only one nation can own 20%. From that angle, a strategic Bitcoin reserve isn't just an investment. It's a power move to secure America's economic high ground for the next 100 years. An $81 trillion prize sounds great, but how do you actually pull it off? How could the U.S. government buy millions of Bitcoin without sending the price to the moon and breaking the market? The proposal lays out a disciplined, step-by-step game plan. Step 1 is already done. Use what you've got. The plan starts with the government's existing pile of roughly 328,000 BTC, which is now officially part of the new strategic reserve. That's a huge, cost-free head start. Step 2 is all about smart, patient buying. The government wouldn't just hit market buy on $1 trillion. Instead, the proposal, reflected in legislation like the Bitcoin Act, calls for a long-term campaign of programmatic purchases, steady buys made daily or weekly over several years. The goal is to slowly soak up supply and accumulate that target of 1 to 5 million Bitcoin without causing crazy price spikes. It's a classic dollar-cost averaging strategy, meant to smooth out the bumps and get a good average price over time. Step 3 is figuring out how to pay for it. Where does the money come from? For this, proponents point to Michael Saylor's own company, MicroStrategy, as a real-world test case. Since 2020, MicroStrategy has used a mix of company cash, debt, and issuing stock to buy over 673,000 BTC. It has proven there's a repeatable playbook for raising money to buy Bitcoin. For the government, the new policies authorize the Treasury to come up with budget-neutral ways to get more Bitcoin as long as it doesn't cost taxpayers. This could mean clever financing, like special-purpose bonds, or even borrowing against the future value of the reserve itself. The final step is creating the right environment. This plan's success isn't just about buying Bitcoin, it's about smart policy. That means creating a clear legal framework that treats Bitcoin as a commodity like digital gold and separates it from the thousands of other crypto assets that might be securities. It also means encouraging innovation in areas like stablecoins, which could become a multi-trillion-dollar market and actually increase demand for U.S. Treasury bonds. We're about to look at some powerful moments in history that suggest this crazy plan might not be so crazy after all. But first, if you're getting value from this look into the future of America's economy, do me a favor and hit that like button. Make sure you're subscribed so you don't miss our next deep dive. It's a small click for you that makes a huge difference for the channel. The thought of a government making a giant, speculative-sounding purchase might seem reckless. But if you look at American history, it's full of bold, strategic buys that looked like gambles at the time, but ended up shaping the country's destiny. Take the Louisiana Purchase in 1803. The U.S. paid about $15 million for over 800,000 square miles of land, literally doubling the size of the country. Back then, a lot of people called it a crazy waste of money for a bunch of untamed wilderness. Today, we call it the American heartland. Or how about buying Alaska from Russia in 1867 for $7.2 million? It was famously mocked as Seward's Folly, a giant frozen wasteland. Turns out it was packed with gold, oil, and other natural resources. Saylor argues that Bitcoin is the unclaimed digital continent of our era, and the U.S. has a chance to claim its stake for pennies on the dollar compared to what it will be worth. To quiet the skeptics, it's also worth comparing this strategy to failed market schemes, like the Hunt brothers trying to corner the silver market back in the 70s. Their goal was to choke the supply to artificially pump the prices scheme that fell apart spectacularly. The Bitcoin strategy is completely different. The goal isn't short-term price manipulation. It's to acquire a strategic slice for a long-term hold, becoming a major participant in the network's growth, not trying to control it. And finally, think about the wilderness years of today's tech giants. In 2013, Apple's stock got hammered, and Wall Street was ready to write it off. In its early days, everyone laughed at Amazon, saying it would never make a profit. Saylor draws a direct line from that to Bitcoin's infamous volatility. He sees the big price crashes, like the 45% drops we've seen, not as a red flag, but as the valley of despair that often comes right before mass adoption and explosive growth. In other words, a generational buying opportunity. Of course, a plan this huge isn't without major risks and loud critics. So let's get real and ask the tough questions. The most obvious risk is the insane volatility. Bitcoin's price is famously a roller coaster. What happens if the US invests billions and the price just crashes and stays dead for years? Critics point out that even MicroStrategy has, at times, been deep in the red on its investment. The counter-argument from supporters is that for a forever holder like a government, short-term price swings just don't matter. They see those downturns as nothing more than a discounted chance to buy more of the asset on sale. Then you have the political and regulatory minefield. Committing the nation to a decades-long Bitcoin buying spree would take incredible political will and agreement from both parties, something that is pretty hard to find these days. A new administration could just reverse the policy, potentially forcing a fire sale at the worst possible time and causing chaos in the market. Technological threats are also a real concern. Could someone find a fatal flaw in Bitcoin's code? Could quantum computers one day become powerful enough to crack its security? While experts say these are long-shot risks with potential fixes, you can't just ignore them. And finally, there's the philosophical fight. Bitcoin was born out of a cypherpunk dream of being decentralized and free from government control. Does a superpower like the US buying up a huge chunk of it kill that very ideal? Some argue it just turns Bitcoin into another tool of the state. The other side says Bitcoin is an open, apolitical system that anyone can use, including governments. In that view, government adoption doesn't corrupt the network. It's the ultimate validation of its success on the world's biggest stage. While Michael Saylor might be the loudest voice in the room, this is no longer a one-man show. The idea of a strategic Bitcoin reserve is picking up real political steam. In the last few years, crypto has become a serious political issue. Industry-backed PACs are influencing elections, and executives are openly endorsing candidates. This has led to actual policy talks. The Trump administration has signaled a very friendly stance toward crypto, culminating in the move to establish the reserve and hosting a digital assets summit at the White House with top industry leaders. Key lawmakers like Senators Cynthia Lummis and Ted Cruz have become vocal champions for a national Bitcoin strategy, building a base of support in Congress. The conversation has officially moved from the internet forums to formal roundtables in the House of Representatives. And leaders from major companies like Coinbase and Marathon Digital are actively lobbying in D.C., creating a powerful alliance of political and business interests, all pushing for the same thing. Events like the annual Bitcoin conference, where Saylor is a star speaker, now draw tens of thousands of people, including politicians and big-time investors, making the idea of Bitcoin as a serious national asset feel more and more normal. A powerful story is taking shape in these circles. The U.S. needs to lead the digital asset revolution, or it will get left behind. So, here's where we land. We have a blueprint for what might be the boldest financial play in American history. A plan to turn a scarce digital asset into the foundation of the nation's 21st century wealth. The plan uses an asset the government already has, lays out a patient and disciplined way to get more, and is backed by historical bets that literally built the country we know today. The potential reward is almost too big to imagine, an $81 trillion windfall that could help solve the debt crisis, shield against inflation, and secure America's economic future. But the risks are just as huge. The volatility is real. The political fight will be fierce, and this move would forever change the relationship between government and this new kind of money. This brings us to the final question. Is this the digital Louisiana Purchase of our time a brilliant move that historians will praise for centuries? Or is it the single biggest financial gamble a nation has ever taken? What do you think the government should do with its Bitcoin? Let me know your thoughts in the comments below. Thanks for watching. If you want to stay ahead of how technology is changing our world, make sure you're subscribed. I'll see you in the next one.